Good morning. Good morning. Good morning. Hope everybody had a good 3-day weekend. It's 8:25 a.m. It's February 21st. Um, Markets are down. Markets are down. Um, there's a couple reasons for that. Why? Uh, there's a lot of things I'm going to talk about today that made sense to me over the weekend. There is a good follow on Twitter. I'm not going to lie. Mayhem in Markets. Put out a video. It's like an hour and 15, hour and 20 minutes long. He kind of made sense of why this market seems to just be getting bought up from the beginning of the year, even though everything is negative, right? I mean, markets could become irrational longer than you could become solvent. That's the words that's saying. Um, However, he made some compelling, and I've heard it in other places, data that why this market is doing what it's doing. And I'm gonna go into that. I'm gonna try to share it with you guys briefly to not kill you guys with too many stuff, but I think it's worth noting. Okay, so I'm gonna do. We're just gonna get into some stuff here. I think that it should be helpful to make sense of what's going on in the market. It made sense to me. So really quick, I'm just gonna go over to watch. Let's see what we got going on here. The VIX up 11.74%. I mean, that's enough said, right? Over 22. I said that we needed to get over 22. So 10-year yields up 1.88%. It's at 3.9. Another level I've been talking about. The crude's up 0.63. Let's see, the dollar up. It's at 104. Remember, I talked about that as well. Bonds being sold, 30-year bonds. Let's see, ES down 0.87. Bitcoin down 0.9. The Dow's down almost a percent. Russell down over a percent. Russell held up strong on Friday, but not today. NQ down 1.15%. All right. Let's talk about some leaders and laggards. Meta is actually up. Okay. And that is one standout, right? But who we got at the bottom of the list here? Snow getting hammered down 2.12%. AMD also. Tesla also. But let's just go to the 2%ers. Coin down 2.76%. Earnings are coming up. Same with Snow. Baba's down 3.31%. Okay. No leader to speak of in the top sectors, but in the bottom, let's go to the bottom. Salesforce, Roblox, Walmart. Walmart came out with bad guidance. Home Depot the same. Okay. Revenues, I think they missed revenues for the future for guidance as well. All right, let's go down to the sectors. Let's just go to the laggards. All right, we got real estate, tech. That's really what we care about. That's what moved the market, 1.27, and discretionary down 1.54. Okay, discretionary is down so much because the leaders in that sector is Tesla, Amazon, and Home Depot. Okay, that's why that's so weak. Okay, now let's get into this week, and then I'll go into the cool stuff I found, like that I watched over the weekend. Okay, so this week, today, what do we have? We have services PMI at 945, as well as global composite PMI, manufacturing PMI. So stay away from a day trade at 945. Also have existing home sales at 10 a.m. All right. Wednesday, not much to speak of. We got some Fed speak. Let's see. Thursday, GDP, initial jobless claims, and then more Fed speak. Okay. Friday, the big one. We get core PCE, personal spending, Michigan consumer expectations, consumer sentiment, new home sales, and then more Fed speak. Okay. That's what we have going on for the week. Okay. Now, let's get into what I wanted to talk about. Okay. So obviously, what have we been doing in this market, right? Ever since, what did it go right in here, January, we kind of just went up, and now we're holding prices, right? But everything doesn't make sense, right? Earnings miss, Apple, like Microsoft, Amazon, right? And we're pushed higher. Now you have yields rising, dollarizing, you saw the VIX, right? Why is this happening? Why are we just getting it now? There's a reason for that, right? So, if you ever heard don't fight the Fed, right? Don't fight the Fed, okay? So, if we go over, I'm going to bring you guys over here. Just look at a couple things here. And we look at the Fed's balance sheet over the last year. Okay, I'm going to bring that up now. Here's the Fed's balance sheet. Why are you doing that? Why are you doing that to me? Give me 1 second, guys. I'm going to get you. Okay, so Fed's balance sheet's been going down, right? This is called QT, quantitative tightening, right? That's taking liquidity out of the market. And you can clearly see, if we go to 5-year timeline, the ramp from here to here, which made the market go up, right? Don't fight the Fed. The Fed does quantitative easing, the markets go up. Supposedly the Fed does quantitative tightening, the market should go down, right? Well, why is the market going down? Well, there's a reason for that. Okay? Now, what I've learned over the weekend is 2 things. Okay? And it's very important. So if I show you this, this is central banks. Now notice these green rising and this yellow or orange kind of rising. That's central banks pumping liquidity. You can notice the Fed, which is us, the red, is going down. The ECB is blue. It's going down, right? But check out the green. That is the Bank of Japan. They're injecting liquidity. This is China, People's Republic of China, or People's Bank of China, right? Injecting liquidity while we are tightening. Now, on top of this, here's something else, okay, that I just learned. And I heard it before, but I wasn't sure necessarily if this was true, exactly true. Now, the other thing I've learned, all right, is that the Treasury, okay, the Treasury, you'll see it called the TGA, which is the Treasury General Account, okay. It's been injecting liquidity into the market, and it's canceling out the Fed's quantitative tightening. So the Treasury General Account is injecting liquidity while the Fed is tightening, and it's kind of making it nil. And you have Public of China, the Bank of China and Japan injecting liquidity, right? So our quantitative tightening we're doing is getting canceled. Now this makes more sense of why the market's been going up, right? I understand we've just pulled back, but this is why we've been going up. So I'm just going to read this. I thought this is very interesting. So it says, if the Federal Reserve is to ease monetary policy this year, it may be a backdoor loosening around its quantitative tightening channel rather than lowering interest rates. The catalyst, the U.S. debt ceiling, right? So, as yet another debt ceiling crisis looms, potentially the most rancorous to date, the Treasury will have to run down its cash balance at the Fed, with potential knock-on effects on market liquidity, the yield curve, and even the dollar. So this is what it says. This is the most important sentence, okay? It says, absent congressional agreement to raise the debt limit, Treasury will run down the Treasury General Account, essentially its checking account at the Federal Reserve, to meet its federal obligations before running out of cash sometime in June. Now this is where the important sentence is. The TGA is a liability on the Fed's balance sheet. This means that when the TGA goes down, reserves go up, effectively administrating an injection of liquidity into the system. That is insane. This means that the TGA goes down, reserves go up, effectively administering an injection of liquidity into the system. So look at the TGA, this blue right here, it's going down. That's injecting liquidity into the market. Here's reverse repos going up, right? Now look what this says right here. This runs counter to the Fed's current stance of pursuing a tighter monetary policy. To me, that's like, phew, made all the sense in the world. Now, we can get back to this daily chart, okay? I just thought that was like, wow, right? So to sum up of what I'm saying, and who knows who's even listening, because I hope you play it back. I hope somebody listens, because that makes sense to me now. Okay? Now, the review. Quantitative tightening is supposed to bring down the market. Rising yields bring down the market, right? Now, we have China and Japan injecting liquidity, and you have our Treasury general account injecting liquidity, canceling out the quantitative tightening done by the Fed. There you go. Okay, now let's get into this. All right, in a range, in a downtrend, a little short-term downtrend. Okay, this swing low was taken out. Okay, but then we got some buying excess at the end of Friday. Okay, now we're underneath the 20. We were underneath the 9 daily EMA. We're underneath the anchored VWAP from the FOMC. Okay, this cancels FOMC. So that's where we're at. Okay, let's look at the Qs. Qs went above the 20. Okay, and they're below the 9 daily EMA. Right, still above the 200-day moving average. So that's kind of where we're at in the Qs. Now let's look at that triple-headed monster. Okay, that triple-headed monster is something else. 10-year yield. I talked about this. Okay, and I'm no genius. It's just look at the smart money, what it's doing. The yield is rising. We're at this support level now. Resistance level. We're trending higher, right? We went down, balanced. Now yields are selling off. Yields are rising, which means bonds are being sold. Okay, let's look at the TLT. We will see it. Should be seeing it go down. Yep. TLT going down, right? It's the inverse. So if this continues, if we break, we might see a pullback here. But if we break this, that is not going to be good. Okay, that's going to be risk off. So let's go look at the VIX. Look at that. We closed down here at like 20. Look at this. Gap up, and we're at 22.4. I said we needed to get above 22, right? We're above it now. We're above 22. Can this hold? I'm not sure. But that is definitely going to give us legs to the downside. Okay, let's look at that dollar. Dollar, I said, look, it touched this resistance at 104, right? It was just at 104 before. We're at 103.9, so we're holding this support at 103.9. Let's see if this can push higher. Okay, all those factors that I just mentioned would mean that the market's going to go down, but I also just mentioned that there's injected liquidity, so it's a battle right now. Okay, let's get into some market profile so we can look at what I'm seeing. Hopefully, hopefully, someone you can catch that what I talked about in the beginning, because I just think it's unbelievable information to make sense of it, of the what this market's doing. Really, really interesting, and concrete of why of what's happening in this market. So, because some people are like, doesn't make sense. Well, now it makes sense, right? All right, let's hit you with the watch list real quick. Let's get into this market profile. Okay, we're gonna look at the real-time trading hours first. See where we're at. Let me just pull up my trusty marker. Okay. All right. So, what did we do? On Friday, we went down, broke this swing low here. We went down here. We couldn't. Sellers were just getting caught. It was like a triple, quadruple bottom down here. Okay. Now I didn't get into what poor highs are and weak lows, but these are weak lows. Now I'll show you that really quickly. I don't want to get into the woods here, but let's look at this. I'm gonna break it out so we can see it. All that I'm saying is, look at all these are 30-minute bars. So tried to get lower, 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 right? Eventually they had to they had to cover their positions. Okay. And we have a poor high right here. So anytime you have equal TPOs, two TPOs, which is time price opportunities, which is just each 30-minute bar, which is a letter. Okay. And let me just, for better transparency, let me just, so you guys can see the letters. So it's not like let's get these letters here so I can really show you guys what I'm talking about. Okay. Market profile is just letters for every 30-minute period. Okay. So I know you could see these now, or hopefully can if you're not on your phone. But this is what is a poor high. See, it already shows me this plugin. It gives me two little white boxes. Okay. Poor high means two 30-minute. It's like a double top, but like, so it's two 30-minute periods that longs got poor location. That's what that means. People who longed here. It's an exact thing. So it's not big banks, institutions. It's the smaller traders that, couldn't get higher here. And usually what that means is eventually this will get broken. And they call it repairing it. Okay. But let's look at the lows, right? I talked about these lows. So I don't usually have it this zoomed in, but A period tried to get down there, D period tried to get down there, E period, and G period. You notice how they're not the same, but they're quite the same? That's why it's called a weak low. So these are weak because we came down here and, shorts got poor location. So back to this chart. I'm giving you a lot of information, but I just don't like saying something and not explain it. And it's probably get long-winded, but all right. So that's what we did in the markets. We have a gap that we never filled. So let's go to what we're seeing today. Okay, I don't count that little session. 2 sessions, I mean, don't really mean much to me. So let's see what we're doing right now. Look at that. We're at the lows. We're at 40.49 right here. Okay. So we're gapping lower. So I consider this to be the low on for Friday, right? We're gapping lower. About to break it probably because we have a weak low. It's probably going to bounce into this demand zone more than likely. Okay. So we have a gap. Anytime you have a gap, they're hard to read. The question always is, here's this previous low. So this would be the gap. active chart of the TGA, I would just do a search. But Colby, all you have to see, if you just look at TGA injecting liquidity, you do a search. It will basically show you the amount that TGA has injected versus how much the Fed has tightened, and it's basically cancels it out. I'm sure you can find it somewhere. But even if you find the exact thing, right? Like, I'm just saying, it's already, you can do your due diligence. I'm just saying, like, what I was saying to generalize it is it's canceling it. So just to know that they are basically canceling the tightening. And then you have China and Japan injecting liquidity. So I don't know if you caught the whole beginning of what I said, Colby. Hopefully you did. But go back and listen then if you didn't. Um, so here we go. We're down here. We got a week low now. Down here. Okay. So, and this is very important. So we're 100% pretty much net short overnight. So everybody is short. Now, that presents an opportunity for a fade. Okay. However, this is not poor structure in the overnight. All right, we can make this a little bigger, just so we can look at this. Okay, make this a little bigger. We could even put it like this. All right, so here's our gap fill from the lows of Friday. This is all we care about. All right, now whenever you're 100% net short, I'm sorry. So everybody from this part is short. All right. Now you don't have poor structure because you don't have a lot of single prints and you have volume building down here. Okay. The most traded price of the overnight, oh, it just moved. I don't know if you guys caught that. The most traded price just happened to be here now. Okay. All right. So the most traded price of the overnight just shifted down here. Now that I know that, the fade is a viable trade. Fade meaning you're going to be going against what the market's doing. Okay. So what would that entail? All right. I like these types of trades because it's just like a rebalance. Okay. So if everybody is short overnight, everybody who's traded is short overnight. Okay. It's clear as could be. Now, what we have is we talk about a gap, but that's besides this. Oh, we just broke this. We just broke that week low. Now that we might see a bounce now. We might see a bounce now. Not sure. Okay, but what we want to look at is this. So I'm going to talk about this, how you fade this, and it's not an easy trade. Okay. See, there's the bounce. Okay. Doesn't mean we can't fall further, but you're going to get a bounce. People are going to take profit. So what I'd like to see for myself is, let's say if I would like to stay down here. I don't want this to move too high, because if it moves higher, guess what? Everybody who just shorted down here, the most volume, is going to cover, and we're going to start to move up to at least around here. But I don't want that to happen for a fade, for it to be a good fade. I would like to open and to push down into this demand zone. Then, let's say it was the opens here. Then if you cross the open, right, you can go long and have your stop here. And then you're going to look, your first target would be the gap fill. And then you'd want to hold on, or hold a runner, or hold on however many you'd want to, and see if we can get back to the most traded price around 40.55 of the on Friday session. Just because, you know, but a lot of things have to happen in order for that trade to make sense. Okay, we could just, like I said, we always have to go with the gap is going to tell us the strength or the weakness. Okay, so this gap, now what could happen, right? We could get a gap and go, bearish, right? We could get fail to fill the gap and go down, bearish. We can get a gap fill and then that get rolls over, bearish, right? However, we could fill the gap, start coming into range, start pushing into range, and then it's like, okay, this selling is not as strong, right? That's what you have to look at first. How do we handle that? All right. And I would say this is not easy because we really have a lot of supply overhead. Supply zone, supply zone, supply zone. So this long is a harder long this time. And the most traded price of the week has moved down in the 24-hour session to 40.70. That would be the first hurdle, and it lines up with this supply zone. So I would say that's a tough long today. I wouldn't be really looking crazy long unless something really would happen. There's a lot of supply of overhead. Okay. All right. Let's look at the NASDAQ. NASDAQ has this swing low that you want to take out. All right, that's been problematic. Look, on Friday we couldn't take it out. Still have single prints from the Fed, FOMC. Okay, couldn't fill the gap either. So we have a gap here, right? Now let's look at what we're doing now. We're low. Wow, got weaker. Okay, let's open this up a little bit. Okay, so in the profile, just want to point this out. Okay, we have a composite profile here. So you have skinny volume. Now we're building value out lower. So that's a bearish imbalance. We're building more value down here. The more you do, you're going to expect to move lower. We'll have to see. Okay, so now we are moving into the single prints again. All right, so if I split this out, you can see we moved earlier. See, we moved earlier. We had a double bottom here. Okay. So let's zoom in. Okay. So earlier in the overnight, we had a double bottom here, and now we've been one time framing lower. Okay. The most traded price of the overnight's down here now. Right here. Same thing, what I'm talking about in the NASDAQ. Now these single prints are not cleaned until we do this in the real-time trading hours. So even though we dipped into here, these are for FOMC. Okay, there's not going to be a ton of support down here. If we come back with volume, we could move down here. But again, same thing I was talking about before is the fade. Okay, so same type of trade. It's all about the gap fill at the lows, 122.65. Do we gap and go? Do we fail to fill the gap, go? Do we fill the gap, roll over, or do we go back in range? That's how you can feel the strength of the market or weakness of the market. Okay? So, same thing, what I'm going to look for, and depending on what's weaker, the S&P or the NASDAQ, I want to, off the open, again, 100% net short. Come down in here, and then you want to see if it crosses the open. If it has some strength, target the gap fill. Go for the most traded price of the week. I'm sorry, of the Friday, which is about 123.10. Now, a lot of things have to open up for that to happen, for me to see that, But definitely, if you get some push, all you're gonna do is correct everyone who's short down here. They're gonna cover. You should get the gap fill. So the other thing I'd be looking at today is just any play back into supply. But I have to judge the market, how strong or weak it is, right? If we start moving back, just think about this. If we start moving back into range and we even go to this supply, that's gonna be, okay. You know, this is like showing a little more strength in the buyer. So like, I'd have to really see, how it moved up there, you know. So it's very difficult right now because if you come that far back up into range, that's maybe show some strength in the buyers. So, like I said, that first move, like I'm looking for, might be the move. Okay. And as well, I didn't mention it earlier. Is remember I said gave you all the gap. As if it does this, the gap, right? Well, another trade is the short. If we go to the gap and we can't move higher, then that is a viable short where you're going to target the overnight lows, which is 122.27, because that shows you the weakness and it's there. Okay, because think about what I said before. I said the long and target the gap fill. So what does that mean? I turn into a seller when I target that, and then there's going to be shorts there that's going to short there. So that would together it would be a nice short, and then maybe target the end of these single prints, which would be about 122.04. All right. So that's about it for me. I hope I dropped some nuggets of information. I mean, I'd have to say I did, because that made sense to me what the market is doing. I want to wish everybody good luck today in trading, and be patient. We're having a gap right now. It's small, but this market has been very unpredictable, and you just got to pick your spots. And wish everybody comment, like, or subscribe. Share with, please share or share. I have a Twitter account. I don't know who. Let's see here. It's at Gonzo719. So my Twitter account is at Gonzo719. I believe that's it. That'd be horrible if it wasn't. But yeah, give me a follow, and I hope you guys stay green today. And I'll be back tomorrow, and I will try to do an update today if I see something to note. All right, guys and girls. See you guys tomorrow.